Welcome to The Mortgage Voice with Jeff Barton, your voice in the mortgage industry. Each week on this program, Jeff and his guests share their expertise, personal anecdotes, and the latest industry news to keep you in the loop. Now, to provide you with insight and help you navigate the consistently changing world of real estate lending, here is your host for The Mortgage Voice, Jeff Barton.
Welcome, everybody. I'm Jeff Barton. I'm your host for The Mortgage Voice, and we are on live here in my home. And before we start anything, I want to say thanks to Daryl who's got to hook this up to make us available for the show each and every week. It's not simple right now, as many people are experiencing trying to work from home. Really not simple. But I have one beef, and again, this is Jeff Barton, and thank you for listening. This is The Mortgage Voice. We're on each and every week. We're on a bunch of different stations here in Central California and, of course, up in Las Vegas, Nevada. Biggest pet peeve with people working from home in our industry is, and I'll tell you, it's because they stare at the computer camera. Why is that? Dale, can you tell me why do people who are being interviewed currently on any of these talk shows just sit like stoic dummies in front of the camera and just like they're I just can't handle it. I don't like it.
It's like they're taking an old-timey photograph.
It's terrible. It's just not natural. And, of course, everybody's now trying to be the set designer of du jour, right? So behind you, as you see behind me, there are things to look at. And my cat is running around, so hopefully the cat will get in the shot. But the fact is that people just have to relax and act as if they're not on camera. And that really, it's funny, when you get into a studio setting, and I've been in several times, and I've been on different shows and movies and things like that, you get comfortable in front of the screen playing the character. And I anticipate, like Jim Cramer or many of these financial news people, they get in front of the camera and it becomes a comfort zone. But you put them at home in front of their computer camera and it just looks so stilted and cold, and I don't know. Just one of the things that bugs me. So people just try to relax if you could out there. And I would say that too is the way we would look at the mortgage markets and what's happening today in terms of availability of funds and the numerous things that are out there scaring people to death. There are some things that we have to be aware of, and that's one of the things in this particular segment I wanted to focus on. I wrote down some notes this time just because I didn't have the ability to print things out. Please excuse me. Okay. What is happening to make funds available in our marketplace? Mortgages for you're trying to get a refinance done. You're in the middle of a purchase. Right now, you're not quite sure whether you're going to be able to get those loans, whether you're going to be able to close on the funds. That the lender is coming up with new and unique ways to slow the process down. What do I mean by that? That's a Cuomo thing, right? I don't know if you've been watching Governor Cuomo from New York during this entire thing. He, like Rumsfeld used to do it during W's administration. They would ask a question and answer it themselves. Why is it done like that? And I'll tell you why it's done like that. Okay, so I'm going to play those people right now, Governor Cuomo or Secretary Rumsfeld. So the availability of funds. Why are the availability of funds so difficult, and why are the lenders slowing down in terms of the process? Because we've never been in a situation like this before. We are in a situation where we're calling a timeout, a go stand in the corner, a wait and hold your breath, a do nothing and just sit there. All of these euphemisms for what's exactly happening to the economy, both here in the United States, here in California, in Las Vegas, Nevada, in any state you're going to, as well as the world. Trying to make sense of not doing anything. Now, how does that work? Okay, I've got a mortgage. I'm supposed to pay my mortgage tomorrow. I've been told by the federal government, by the Fed, by the people who are at the Treasury, that we are trying to get the regulators, as well as the banks you owe the money to do a 90-day stop. What does that mean? It means you don't have to pay your mortgage. Not now. It's going to get tacked on to the end, but not now. Well, how does that work when the regulators, the mortgage-backed securities, and We talk about these things all the time, every week on every show. Mortgage-backed securities allows people at Fannie and Freddie, people at Ginnie, even in the private sector when it came to non-QM loans, to bundle the loans together and sell the securities, what they call the bonds, the mortgage-backed securities, to any number of different investors. So in that investment, what they're called are tranches. You don't have to buy the whole investment. You can just buy a portion. Like you just wanted to buy 30-year fixed assets at 3.25%, and you only want to buy $10 million worth. That's what they call a derivative. So if you look at the $1.5 trillion in mortgages sold last year, $500 billion sold in the private sector for non-QM loans, and $1 trillion sold in the public sector, you look at how the mortgage-backed securities are sold. That particular money, that amount of money, goes back into the system to get relent out to you, the borrower. It's called liquidity. How does this liquidity get managed? And how do we make sure that it doesn't stop? The only way in the past, and up till like now, tomorrow, because it's April 1st, you'll be hearing the show a couple of days after I'm recording it, is people pay their mortgages. That's how it works. Well, if the Fed, the Treasury, and all of the regulators, as well as state governors and the President of the United States are saying, no, we're going to call a timeout for 90 days. How do all these things, which supply money to the mortgage market based on the return, based on the steady flow of capital from the individual borrowers to the banks, from the banks to the people in mortgage-backed securities, this flow of capital, how is it going to continue if, in fact, I don't pay my mortgage? Times 40 million other people who don't want to pay their mortgages because they don't have income coming in. 3.5 million people went out of work last week. That's, and they're saying it could be up to 9, 10, 11 million people, all within the course of 30 days. How is it going to work? There are a couple of people who are really smart who are trying to figure this out. But because we don't know, because we've never done this before, the guy that I was listening to, and you can go and listen to him too, his name is, what is his name? Tom Barack, right? When I first saw Barack, I thought he could be ex-president. But of course, no. This guy, Tom Barack, is a really smart guy. And he, plain spoken English, talks about what's happening, as I just explained it to you. And because we're in a no knowledge, we're no experience, nobody really understands what happens when we're in a situation like this. His remarks and how he's addressing it is comforting because it sounds as if we can actually take 90 days and do nothing. Amazing. How? Okay, let's say we do that. So then the government will send you money. If you're a business, you can apply for a small business loan to keep people paid. The loans will get forgiven. By the way, I went on to a site yesterday to fill out the application. I saw it. I said, well, heck yeah, I've got employees that I want to keep employed because in the mortgage business, if we're not doing mortgages, well, it's very difficult to just watch your money go out the door. So, yes, there would have been layoffs unless we can get this loan that gets forgiven. But in our business, and what's happening today, the free exchange of I give you collateral on my house and you give me money to buy my house. That's how it works. Or I write a new loan and you give me money like a cash out or a lower rate and term mortgage. How is it going to work? This is what's going to happen. So I have some solutions. I think that what we're laying out here is the possibility that we can get through this if it's a 90-day issue, 90-day problem, which I believe there's two problems here, right? There's right now and the fall. This is everybody's talking about the rebound. So we'll leave that into the next section. I have three great guests today to talk about what's happening in their life, and I really appreciate you once again listening to the show. I'm Jeff Barton, your voice in the mortgage industry, and we'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton. I'm your host for The Mortgage Voice, and thanks very much for tuning in. You know, we are on Apple Podcasts as well as Google Music Play, and we're on each and every week. The show is weekly, and we're airing on 4 different stations. If you want to go to our podcast, we hope you do. And if you would like to see us on YouTube, you can go to our YouTube channel, Jeff Barton, The Mortgage Voice, where this, as well as many other shows, are going to be seen there. We have a lot of different ways that we can try to get this going, but during this time, where we're having some difficulties, both nationally, internationally, funding loans, availability of funds, I've thought to bring on a lot of local, terrific loan officers to the show to be able to tell us what's happening in the field with their particular borrowers. And joining us once again on the show, a terrific person who has been on the show many times, Brenda Scott, and she works for Malibu Funding. Brenda, how are you?
I'm good, Jeff. How you doing?
You know what? Other than not knowing what I'm doing pretty well.
Hey, well, you're in the crowd. Well, I don't know what I'm doing either.
It's really quite something, isn't it?
It is. What is it? Unprecedented. I can't even imagine going through this again.
Yeah, and an earlier section and last week too, just trying to logistically handle a day-to-day life, keeping your work life going as well as your family life, which is now also weird because people are around all the time. For you, how is it personally?
It's been working out. My son has been home, so we had to separate ourselves. I'm upstairs, he's downstairs. He has a better computer. I have the slowest computer. But it's been working out. He's been doing a lot of interaction with the school this week. Good. Especially. It used to be an hour. Now they're meeting like 3 times a day now.
Oh, that's good.
Yeah,
that's very good.
It's going good. It's going good. And busy. So, I mean, I'm getting a lot of phone calls, and I tell everybody until the rates settle, get everything in because there's no locks that are being done unless you are ready to close.
That's interesting. What are the lenders saying about the locks?
Well, and they don't even have a 30-day lock anymore. They're going to 45 days, and, rates are changing sometimes twice a day. So if you lock a rate, you got to be able to close that loan immediately, but they're not even letting you lock it unless you have everything pretty much into the underwriter, and that is including the appraisal.
Now, how is anybody supposed to commit to a loan without knowing what the rate is? And how are you supposed to disclose that on the LE?
I don't. I just disclose the rate that I disclose to them in the beginning is what I'm using until I find, until the rate comes down to what they're looking for. But most of these I had started prior to the cover, so I had already ordered the appraisals on them. So we're in a good position. The clients know that rate change every day, so they're willing to take that chance to say, let's just go ahead and get the appraisal done. So when the rates get where I want them to be, then we can lock it and close it. So they're being really on the cautious side, but they also are aware that these rates are going down, and you got to be ready to close when they drop.
Okay, so in new business, do you have any new business, i.e. in the last week, 10 days?
Yes, I have. I have new business in the market of streamlining FHA and the ERA, which is the VA loan.
Yep.
I have a few of those I'm hashing out.
And what is the disposition of the borrower? What are they saying when they call you? Are they freaking out? Are they nervous? Are they acting like nothing's going on?
No, they're not nervous. I mean, they're concerned. They want to make sure, they're going to get the best interest rate. And I share with them, in order for you to get the best interest rate, one, you got to be ready, and it has to be at least $150 less than what you're paying now. But most of these clients are having like a 3.8 rate. So you can really get those rates down, and FHA and VA rates are excellent right now. Excellent.
Okay. Now, a good question. Does the are the rates for FHA and VA published, or are they like conventional loans? You have to wait?
No, they're published. They're published.
Okay.
And the Streamline are extremely good because there are lenders out there that all they want to see is your mortgage rating. They don't care about your credit cards. They don't care about your FICO score.
Right.
They just want to make sure your mortgage is paid on time.
Okay, explain to the listeners exactly what kind of loan that is, so if somebody out there listening is hearing you, they can take that.
This is a FHA Streamline loan where you're not getting any tax out, and you're really trying not to touch your existing principal, but you do have the ability. If you have a 4% interest rate, you can drop that rate down. I've seen that rate as low as $2.99 on an FHA. But you got to be ready to close. And sometimes you may have to come in with 1 month of that mortgage payment because you can't increase their original principal balance.
Now, is it true that in one of these Streamline loans that the upfront mortgage insurance premium gets transferred from the original loan to this loan?
Yes, it does. Especially if it does. They're transferring what you had originally versus the higher cost now.
Right. So it's actually cheaper than originating a first-time loan.
Absolutely. Absolutely. And I'm going to tell you also, I just recently closed one, is that Home Ready program. They don't do a lot of advertising for that program, but that is a really good program for people who make less than $75,000 a year. I mean, you still get an awesome interest rate, and you only come in with 3% down.
Let me ask you a question on what happens in a month when somebody finds a house they want to buy, but they've been laid off because of the coronavirus. And, we're not quite sure how the lenders are going to view that. Do they go back to their original employer and get a letter saying they'll be rehired? How does all this work, or does it work at all?
Well, we haven't gotten to that stage. I talked to one lender today, and they're saying that they have to verify, the employment, 10 days prior to that loan closing. So it can be 10 days, or it can be right up to the day that it closed, that they verify that you are employed. If you're not employed, then, you're not qualifying for that loan.
Yeah, I heard that United Wholesale is doing exactly that. That, in fact, they are like at the closing table, so to speak, they are verifying your employment. Now, I don't know how they do that. Is it a phone call?
There's a company that most of the lenders are using to verify your employment. So that's
it number?
Yeah, no, it's another. It's I forgot the name of this company. They're using a third party to verify the employment, but Work is obviously one of them. And then one of the lenders says the funder will actually call to verify that employment right before closing.
So what do you say to somebody who wants to buy a house and the situation is a little bit dicey at their employment? I mean, obviously, if they get to the closing table and the lender says, we can't verify your income, it's going to be an issue if they have to lose a deposit.
1 minute, Jeff.
It will be. It will be. It will be. It will be.
Yeah, I just don't, because what we're being told at the macro level, right? Big boys, it's Fannie and Freddie and the Treasury and over at the Fed, is that they're going to call this timeout for 90 days and freeze everything. Well, how does that really work when somebody, I don't know. I have no idea.
When you're in escrow and you got to close and you got to,
Right.
you got the seller and the buyer. You just got to work it out because it's a transaction. It's a contractual contract,
Well, I agree.
But if they can't close a loan, you can't force them if the lender is not doing it. But all lenders are not the same. Sometimes I'm even finding myself where I'm double apping because, what one lender can't do, the other lender can. So if I run into a problem, at least we have two options. They can't say, we didn't try to do it. We and they're adding another form. I just talked to an appraisal today, and they said there's forms that they're going to have to sign as well to verify and to confirm that the house is still there and then the value is still there. That's another possibility that we may run into.
Well, so if this goes on, let's say it goes on for a while, and what is going to happen to the value of a home if there is no market to buy and sell it? What is it worth?
We're going to be in big trouble. We're going to go back to 2008.
Oh, man, I hope not. I mean,
and
that's the panic in the market, right? I mean,
that's the panic.
Right. That's what people are saying, because then you're going to find people walking. They're going to say, I'm not going to, I did this before. I'm not going to wait it out 10 years before my house comes back to
value.
Yeah, to the value.
But then now you're going to go back to, people are going to start renting their houses. And I'm going to tell you something. That's a different breed, because renting your home, you better be extremely smart and careful of who you put in your house, because if there's some whole new laws that covers them. And it has nothing to do with the landlord. The landlord is screwed on a lot of issues right now. I
agree. I mean, the whole push to protect tenants' rights is really low.
Yeah, and they know this little system, and they milk it. I'm personally going through it right now myself.
Oh, I'm sorry.
It's horrible. It is a horrible thing.
Yeah, it's as if somehow the tables have been turned, and somebody who wants to have residual income and rent out a property and be a proud, landlord, a small investor, now is turned into this whole, you have no rights to your own home.
You don't.
Yeah, I know.
You don't. And mine is not even a unit. I had rented a room from her, so she's not even in an apartment, but it is being treated like it is a separate unit and not my personal residence.
Hey, Jeff, we're running out of time.
Please be careful when you let people in your house. Just be careful.
I 100% agree. Okay, so for the short term, next 30 days, what we see is a stable market. We see interest rates fluctuating, but for those that are in the market, what is the suggestion?
I say get it. I say move forward and get everything prepared. Maybe not so much as signing that final contract, but at least secure your finance. Secure that with that low rate, because that will give you more buying power when you are ready to close in 45, 60 days. You're ready to close now.
Right. Okay. Hey, Brenda, why don't you shout out your phone number for anybody who needs a terrific loan officer and somebody who really understands this particular market and the good products that
Yes. Please call me, even if you have just the dumbest, smallest question, because there is no dumb question, but just 562-500-2400. Call us first before you call the other guy.
Brenda, thank you very much for coming on the show. I really appreciate it.
Thank you, Jeff, for having me. God bless you and be safe.
You too. Thank you very much. That's Brenda Scott from Malibu Funding, and I'm Jeff Barton, your voice in the mortgage industry. We'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For questions or comments, send emails to info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. Thank you very much for tuning in to the show. You know, we're on Apple Podcasts as well as Google Music Play. The show is a pretty good hit, and we appreciate those who come to the show each and every week. We're on a number of different podcasts, the Big Eight, they call them, as well as on YouTube. And if you go to YouTube, you can see us, Jeff Barton, the Mortgage Voice, this as well as many other shows. I think what we're looking to try to do for this week, next week, and the foreseeable future is to bring some semblance of calm and also accurate information as to what's going on in the mortgage marketplace now and in the future. Talk about some things that you may be thinking about as well, and try to prepare you for whatever is the eventuality once this gets going, gets to the end, and then back to some normalcy. One of the guys that I go to because he's a very smart guy. He used to work for Malibu Funding and now works over at U.S. Direct Lender, is Amir Saif, and he's kind enough to join us today. Amir, how are you?
Great, thank you, Jeff. It's always great to talk to you.
It's great to talk to you as well. Okay, give us a little bit of an idea, a little flavor of what's happening in your business with not only your own loans and your loan business, but the customers and how it's working out working from home.
Well, most of the companies I know, they are working either with half personnel, or some of them are not set up to work from home. So everything is not moving as smoothly or as quickly as before, but everyone is trying to adapt to the new situation.
Yeah, I agree with you.
As you know, like 2 weeks ago, we had a hit on secondary market that the loans are being sold, and in a day, everything went up and everyone stopped buying loans. So the non-QM market was shut down. Then everyone stopped buying jumbo loans. But the good news is, since 2 days ago, because we are a direct lender too, we started doing jumbo loans too, and I'm pretty sure there are other lenders as Malibu Funding doing jumbo loans as well. So this shows that the market is a little bit calmer than before.
I agree with that. And how are your customers who were expecting to get non-QM loans, how are you servicing them, or what are you telling them?
Well, non-QM is not going to be available for at least for 4 or 5 months, as our advisors are telling us.
Right.
So most likely they have to either wait or they have to file their taxes and use their taxes. I don't think the non-QM is going to be back at least for 3 months.
Okay. And the securitization for that, or the value in the property that either they're going to refinance or purchase, what do you think is going to happen to home values?
Well, we believe that up to $500,000 home values, we are not going to see many changes. Okay. 500 to 766, maybe 5%. But anything million and above, because most of those clients are business owners and all their businesses have had a really bad effect because of this situation, those prices are going to be affected.
That's interesting.
We are expecting 10 to 20% price reduce, anything down like 1.5 or up.
And, okay, so if we get that kind of reduction in the high-end market, and we're in the Los Angeles area, and the market here is mostly high-end, as it is in a lot of Southern California, it'll be a boon to buyers looking to buy, but, with the job loss the way it is, I guess I'm looking for answers. I'm looking for the security that I know that you can bring me by you telling me through your crystal ball that everything is going to be okay and people won't lose their jobs. What do you think is going to happen?
I believe even if we fix the situation tomorrow, it's going to take at least 6 months for businesses to go back to normal, because I know a lot of them lost a lot of money during the shutdowns. So it's easy to destroy something in one day, but in order to rebuild it, you need time. So I don't think the high-end properties are going to be back anytime soon, or the buyers for high-end properties would be available anytime soon.
Okay, so really that particular market is just going to have to sit and wait. We've been talking to a number of guests and people offline about the value in the properties. You're saying, of course, that the $500,000 or the $700,000 and below will be relatively safe. And you're basing that just based on your projections, the guests, the guys at the office that have been through it before in 2008?
Well, we have our own advisors, and on top of that, these are guaranteed by federal government. So these are confirming or high balance loans. You can sell them easily, and people who can afford $500,000 house or $700,000, they have to pay rent somewhere too. So if they can afford to pay rent, they can afford to pay their property as well. And most of them are employees, not business owners. You know, employees, at the end of the day, if they don't get laid off, they get their salary, even though the business is not making money. As you are a business owner, and you know that.
Right, and so how does that program work? Have you looked into that in terms of having this loan from the Small Business Administration?
The SBA loan?
Yeah, what they're doing is that they're loaning money to small businesses in order for you to pay your payroll.
Yes, they are, but at the end of the day, we have to pay that back. So it is going to help businesses to survive. But again, they have to pay these back. So employees might survive this very well, but big businesses, I believe they're going to be hurt anyway. So it's going to take time before they come back into market and try to buy high-end property.
Now, I've been told that that particular SBA loan is forgiven if you use it solely to pay salaries. Is that not true?
It's forgiven if you've got an SBA loan that you've taken. You filled out the forms for the big one, and they'll give you the small one. Forgive it if you get awarded the big one.
To be honest, I have heard that, but so far, when we contacted our bank regarding that, they haven't seen any document that says that, okay, if you pay the salary, it's going to be forgiven. He on paper.
Yeah, I would love to see that documentation. I filled out an application last night myself in terms of trying to figure out what we're doing to pay salaries. Otherwise, we have to lay people off too. But there was nowhere in the application itself that gave me the terms. So unless I see a terms that says, okay, if you use this for this, you can be forgiven after a certain amount of time, it's probably not a loan I'm going to want. At 3.5%, 4%, no.
Exactly. So as I said, I haven't seen that on the paper yet. I have heard that too, and I did call my friends at bank. They haven't seen it either.
Yeah, it's just, it's really weird. I don't know how we're going to solve this problem, especially, I guess nobody knows, right? Isn't that what we're getting here, is that this is all such new territory? And most of the people who are professionals in the business who are used to doing something based on a playbook that's been done over and over again, this being such new territory, we're not quite sure. And again, let's get back to the first question I asked you. What are you saying to your borrowers?
So the non-QM, I told them that you have to either go back to private money, which a lot of direct lenders are not doing on favorite terms right now, or they have to wait. That's why we think that the high-end properties are going to go down, because even if the government forgives these SBA loans to pay salary to your employees, those people are not the ones who are buying $2 or $5 million properties. Business owners are. So even if they get these SBA loans to pay their salaries, the government is not giving them SBA loans to buy high-end properties.
Right.
So they cannot afford that either way. That's not going to help the high-end market. The best thing it can do is help the up to $766,000, $800,000 purchase prices.
I see. Amir, thanks for coming on and trying to help us through this thing. I want to have you back again in a few weeks just to see how you're making out, get a little bit of analysis of what was and what is. Thanks again for coming on the show. You want to shout out your phone number to let people know how they can get in touch with a terrific loan officer?
Sure, thank you very much. My cell phone is 310-993-3255, and it's always a pleasure to talk to you, Jeff.
Thanks very much, Amir, and I really appreciate both what you do and also your presence online. It's really strong and very positive.
Thank you. Appreciate it.
Thank you very much. That's Amir Safe for U.S. Direct Lender. I'm Jeff Barton, your voice in the mortgage industry, and we'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For more information on today's topic, email Jeff Barton at info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton, your voice in the mortgage industry. Thanks very much for listening and tuning into the show. If you want to see our podcast or listen to our podcast, you can go to Apple Music. And we are there as well as Google Music Play. It's Apple Podcasts, Google Music Play. We're on there and a number of fine podcasts all over the internet. And in terms of what we do on YouTube, go to our YouTube channel, Jeff Barton, the Mortgage Voice, and you can hear us, see us. We're on each and every week, and this show is recorded. So if you do miss it, you can see it there. We're also on 4 different radio stations now, from, I guess, the Inland Empire of Los Angeles out to Las Vegas, Nevada, with a little stop off in Napa at Cape Tahoe, the great radio station out there that hosts the show on the weekends. We have been trying to figure out what's happening in the mortgage industry, how you're going to feel good about the house you just bought if you're not quite sure whether you can close that mortgage on time, or what the new restrictions are going to be to the money you need in order to do that. We've had several guests on the show talking about it. There are a lot of questions, but what we are doing on the show today is to try to walk through the problems, to see some of the solutions, and as we do that, they will become more evident to you because we're going to share that with you. One of the guys who has some of this terrific information, who has some interesting, investment properties going on over in Inglewood, as well as not only his local but international clients, is Josh Thompson. Works for Malibu Funding. Josh, how are you?
I'm great, Jeff. How are you?
I'm okay. As I said, I'm more confused by what's happening in the marketplace than I have answers, but at the same time, I think working through it with the borrower, it's got to be a partnership at this point, right?
Oh, yes, definitely. I think there's a lot of uncertainty on all sides, so that's kind of what I'm doing with my clients, just trying to, take in new information as it comes and figure out what's the best way to move forward.
Okay, let's talk a little bit about your investment properties, not investment properties, but your development properties. I know you're in the middle of, have you gotten paper yet? Do you have your permits to build? Where are you in that process?
We should have had permits tomorrow. We were supposed to have our final meeting with the planning commission to kind of do the final approval for our special use permit and to finalize the tentative tract map, but that meeting was pushed back to April 15th now, due to COVID-19 restrictions, and I'm pretty sure that April 15th meeting will also be pushed back as well.
Well, how does that work? I mean, you're on a timeline here. This is time is money in your business, right? And if you could just quickly review for people who have not heard you on the show talk about your project, where it is and what you're trying to do.
Oh, yeah. So the project is in Inglewood, California. We have a special use permit to build 20 small lot houses in Inglewood, and all of them are 3 stories, each around 2,000 square feet, 3 bedrooms, 3.5 baths. So, and everything completely from the ground up. What's the hindrance now with this, COVID-19 is just that even our construction lender that we were working with, I mean, midway through the process, we're maybe 30 days out from getting funding, told us, sent us an email a couple days ago and said, hey, we have to put everything on hold for about 30 days. We're not doing any construction lending for that matter. And their reasoning is not due to, them feeling like there's going to be in the market value of the properties or anything like that? Is it more so that there's going to be limited availability of workers, inspections, so on and so forth, which is understandable. It's not the news I wanted to hear, but I do get it.
Okay, so thank you for doing that. And the issue that I see for you, as well as other people who are listening to the show who are in your same business, you can understand them, they can understand you. Putting something like a project like this that has the timelines and you have your costs involved, are your costs being frozen? Or when they give you the permit, do they also say, okay, we're going to give you an extension because, we know that you're in COVID-19 protocols? Or do all your inspection deadlines remain the same, i.e. you have to get this done by a certain date or you lose the permit? How are they handling all these demands of your time?
Yeah, I mean, that's interesting because I don't even know at this point. I mean, and with every other cost that we have, all of those costs are not frozen. So I mean, we're still coming out of pocket for a lot of soft costs and moving forward based on agreements that we already have. So in that sense, no. Permitting wise, I mean, I think that I don't even think they're going to issue a permit until this whole thing is settled down. I think that I know the construction work is being essential and things like that, but from what I see is that a lot of just what the topic is of the show is about is everyone's trying to kind of figure things out. So I'm not sure, and I'm anxious to find out the answer to that as well.
Okay, put on your loan officer hat for a second and tell me what you're telling your borrowers right now, especially if somebody is trying to buy a house and they have a 30-day or a 45-day contract, or they're trying to get money out of their house because they're a little bit scared and they need a nest egg. What are you telling them?
Okay, well, so let's start on purchases, and let's kind of talk Fannie, Freddie, and FHA stuff. I think if you're purchasing in this market now, it's still a great time to purchase. Rates are still extremely low. I don't see too many problems there, and Fannie Mae is making a lot of concessions in regards to appraisals and different things to kind of assist with this process and keep things moving. It's not really like the previous recession where stuff was more so frozen. It seems like Fannie and Freddie are doing a lot to help move that along, so that's good. With refinances right now, I've had a couple of borrowers who, we didn't lock the rate before this whole lockdown thing went into place. Yep. And, every borrower thinks because the Fed rate went down to 0% and the 10-year Treasury bond is around 1% or, wherever it is now, those are all the indicators that point to rates being lower, and everyone's thinking that that's the case. But so many lenders have kind of upticked rates slightly on refinances, especially because they're pricing in. There's so much volume that these lenders are getting now because of all of the news about these indicators and where rates should be, that lenders are kind of trying to curb volume, if you will. So I have some loans that we're just, everything cleared and ready to go, but we're just kind of trying to wait it out to see where the market's going to go so we can, take advantage of the best rates. So I still see that it's a good time to refinance also if it makes sense. But the non-QM lending stuff, that's kind of where it's getting a little funky, if you will. So I had a deal that I was doing with a non-QM lender that actually just completely went out of business.
Citadel Lending.
Yeah, Citadel Active Capital, went under. Because I know those loans, I think in the non-QM world, it's all about, most of those guys are selling the paper on the secondary market or something, so a lot of investors are probably not buying that now. I think some of the bigger...
So their warehouses are calling and nobody's buying and they're out of business.
Exactly. I do know a couple of players that are still in. Sprout Mortgage is pretty good, so, there's some guys that are...
Sprout, right.
Yeah.
Right.
Mm-hmm. So, it's just, like you said, it's just a wait and see right now. But if you're in that world where you can qualify full doc and go Fannie, Freddie, I still think it's a great time to buy. There may be some slight delays. I think 30-day escrows should all be maybe 35 to 40 days just to be safe. But
I agree.
But I do. Go ahead. Oh no, but I agree. Yeah. And I do see, what I do appreciate now is that because this is something that's affecting and impacting all of America and the whole world. To be frank, I at least see that there's a lot of cooperation that wouldn't normally be in place. Like sellers never want to extend listing agents or that whole thing. But I've been a couple purchases I'm working on have been extended. And that's great. Everyone's kind of trying to work together to move stuff forward, so that's good.
Josh, shout out your phone number for people who if they need an experienced person in a lot of different areas in our business, you're the guy. So if you could share your phone number, appreciate it.
Oh, yeah, thank you. It's 323-945-5694.
Josh, thanks very much for coming on the show. Once again, all this good information, and we'll stay tuned, get back to you in a couple, 3 weeks, see how it's going. Appreciate it.
Oh, thank you, Jeff, and stay safe out there.
You too, man. Thank you very much. That's Josh Thompson of Malibu Funding. I'm Jeff Barton, your voice in the mortgage industry, and we'll be right back.
You're listening to The Mortgage Voice with Jeff Barton. We'll be right back with more in just a moment. For questions or comments, send emails to info@malibufunding.net. Now, back to The Mortgage Voice with your host, Jeff Barton.
Welcome back, everybody. I'm Jeff Barton. I'm your voice in the mortgage industry. Thanks very much for listening to the show. You can hear this show as well as every show. We're on Apple Podcasts as well as Google Music Play and all the other fine podcasts available out there. I looked at the show on Apple Podcasts just the other day. It's right there. If you just put in Mortgage Voice or The Mortgage Voice, we pop right up. There's only a few shows about mortgages anyway, so you really can't get lost. Just search around a little bit and you can see what we do. And what we do is we try to inform. We do inform. We have great guests come on and talk about what's happening in the mortgage industry. This is not a you listen and buy our product kind of show. We're trying to help you. This is not an easy time that we're going through. And because of that, we want to be informative and helpful because I'm sure there's a lot of nervousness about whether you're going to be able to pay your mortgage. I know there's a lot of people out of work right now. Whether you're going to be able to buy the house, you're in contract, you got to close in 30 days, or whether you're going to be able to close on that refinance because you need the money in your bank account so you feel a little bit more secure. All of these things we are going to deal with today and each and every show until we actually get this sorted out and solved. If you want to see the show, this and many other shows, go to YouTube. We are on YouTube, Jeff Barton, The Mortgage Voice. We've been there for years, and we have a number of different shows about not only the coronavirus, but other solutions to your mortgage problems. I've been talking earlier in the show and with our guests about what is happening out there in the mortgage marketplace when it comes to deadlines. Okay, I've purchased a house. I have a contract. We're supposed to close in 30 days. Can I expect to close on that on time? The short answer is depends on your lender. If you're looking for a lender right now because you want to buy a house, look for a lender who is a bank. Look for a lender who has a direct access to selling their loans to Fannie and Freddie. Look to a lender who is very well-heeled in terms of their capital reserves. The reason for all this is easy, right? It's easy to see. Some of the lending done out there, and you may have heard or have seen on some of the financial news networks or even some of the local news, but lenders who are leveraged, what does that mean? Leverage is a term by which if you make a loan, I lend you money today on your house. I want to be protected for that loan by making sure that if you default, it's not going to come back on me. That's a hedge, and that is usually done by leverage. So the money that I'm making on that loan, I take and buy what they call short selling the market. Well, if you short sell the market, i.e., if you're short selling something within the stock market, saying that you're betting that the stock market's going to go down, that's a hedge against you possibly losing your job. Those things go hand in hand. the market goes down, it usually means that the economy is not doing as well, and the possibility of you losing your job is greater. Therefore, the protection against the mortgage they just gave you is great. And the investment for short selling is not as great as it would be if they had to come out of pocket for the money that they don't have, and then they would be out of business. So that kind of reinvestment of profits into short selling is a way to hedge against losses because you lost your job. This isn't as complex as it sounds. It's really straightforward. They just want to be protected. If you're looking at a lender who is leveraged with this kind of hedge, the best thing to do is to try to find somebody who isn't doing that. Because when the Treasury decided to buy mortgage-backed securities and to buy a lot of them, as many mortgage-backed securities or as much of mortgage-backed securities as they were buying during the quantum easing, the QE 1, 2, and 3, they're calling this the QE 4. If you don't understand any of this, understand this. Most of the lenders out there who are in mortgages, mortgage lenders like Malibu Funding, are small to medium-sized companies. If you don't pay your mortgage, they go out of business. Those that are well-heeled enough to be able to try to find a way to protect themselves, like insurance, that's kind of what a hedge is. It's insuring themselves against losses. If, in fact, the Fed, who comes in and buys mortgage-backed securities, if that happens over and over again, then that means that the market won't go short. So what happens is, now they've got an additional problem because there is something called what is it called? Darryl, do you know what it's called? It's called, if you have a hedge against the market, it's a margin call. So if you're seeing, I don't know why I spaced out on that. The margin calls themselves require that if there's a gap between what should have happened if the market went down and it didn't go down, that means there's this amount of money that you need to pay to cover the call. So now the mortgage company has two different problems. They have mortgages that are not being paid because people are losing their jobs, and the hedge or the insurance that they're trying to buy by betting on the market to go down, as would be the case in normal times, isn't happening. So now they have another problem. They have to pay the margin call. Anyway, it's a mess. And those kind of things can really screw up your loan if you have to close in 30 days. So, or if you're looking to purchase, or if you're looking to refi. So you want to get into companies that aren't doing that. You want to get into a company that is straightforward in terms of, okay, we have money that we borrow from the federal government. The federal government borrowing rates right now are at 0% or very close to it. So that money coming to you allows me to be able to give you a mortgage because the government just prints the money. So there's no hedge needed for that type of loan from a very large bank. And those funds seem to be highly capitalized in this market, especially since the Fed, the Treasury, are trying to make sure that the liquidity in the market remains. Now, the guidelines for your particular loan are going to be different. They're going to be stricter. You may find that the credit score that you need in order to get that loan, which was, let's say you were doing an FHA loan, and you wanted to give, 3.5% down, and you had a 580 credit score, you may find that most lenders are not going to lend at 580 for now. Even though FHA says they're going to buy that loan, they're not going to lend you the money, the lender. So you're probably going to see a 620 FICO score requirement, and you're probably going to see a higher rate than you want to pay. The reason is that they need to protect themselves if, in fact, the job that you currently have goes away. And as I said in an earlier segment, jobs themselves, we're expecting 10, 11 million jobs lost in the next 90 days or less. So to protect themselves, they're going to increase the guidelines for the loan, they're going to increase the credit score for the loan, and they're going to increase the rate on the loan. Now, what does that mean? It means that, essentially, it's going to be a little bit more difficult for you to get that loan. And I'm not sure why, in any regards, you shouldn't be a little bit nervous. So, in order to do that, you have to make sure that you're finding a lender who, like a bank, a mortgage broker who guess, well heeled enough so that they don't have to hedge, and they are a direct seller. All of these things can impact the way you get a loan and can impact the number of days by which you are expected to close that loan. Daryl, you still there?
Yeah, I am. Can you hear me?
Okay. Yeah, no, I hear you fine. And again, for anybody who's listening to the show, just remember, we are doing this remote, and the magician behind the curtain, Daryl, is not only engineering the show, but trying to juggle 2 or 3 different things at the same time. So if there's a little communication between us, that's why. And, okay, so...
You got about a minute left, Jeff.
What's that?
You have about 1 minute left.
Okay, thank you very much. Okay, so those of you who are listening to the show and have been listening to the show quite regularly will realize that we are in an unprecedented, and I hate that word, but it is true, we're in a time that's never happened before. So the regulators, the people who have a playbook in front of them as to what to do if, when, especially after the 2007-2008 issues that we had in the mortgage crisis and obviously the economic crash, are trying to figure out now what to do when we have something called a timeout, like a 90-day timeout. And as a result of that, all the lenders are making loans harder to do. So the suggestions for me, go to the bank, go to somebody who's got money, go to somebody who isn't leveraged. These are all things that you can find out if you ask, because you will have less inability to be able to fund your loan on time, get the refi on time. Anyway, I'm Jeff Barton. I'm your voice in the mortgage industry. Thanks very much for listening to the show, and we'll see you next time.
You're listening to The Mortgage Voice with Jeff Barton. For more on today's topic, visit www.malibufunding.net.